Hello viewers, let's discuss the introduction to day trading today. Day trading is a trading strategy where individuals buy and sell financial instruments, such as stocks, currencies, options, or futures contracts within the same trading day. Here's an introduction to day trading. 1. Understanding day trading. Day trading involves buying and selling financial assets within a single trading day, with all positions being closed before the market closes for the day. Day traders typically do not hold positions overnight, as they seek to profit from intraday price movements. 2. Time commitment. Day trading requires a significant time commitment and active participation in the markets. Day traders closely monitor price movements, news, and market trends throughout the trading day, often executing multiple trades in a single session. 3. High risk, high reward. Day trading can be highly lucrative, but it also carries significant risks. The volatile nature of the markets and the short-term trading horizon of day trading can lead to rapid gains or losses. Day traders need to manage risk effectively and use proper risk management techniques to protect their capital. 4. Technical analysis. Technical analysis is a common tool used by day traders to analyze price charts and identify trading opportunities. Day traders use technical indicators, chart patterns, and technical analysis tools to make informed decisions about when to enter and exit trades. 5. Trading strategies. Day traders employ a variety of trading strategies to profit from short-term price movements. Some common day trading strategies include scalping, momentum trading, range trading, and breakout trading. Each strategy has its own set of rules and criteria for entering and exiting trades. Day trading can be an exciting and potentially profitable venture for individuals willing to dedicate time, effort, and capital to mastering the craft.